Finding the best odds. Oftentimes, when we think about finding the best odds for a trade, we're thinking today. We're thinking right now. We're looking for the best stocks. We're trying to find the patterns that set up really well. All the while, we're oblivious to where the best odds might actually lie. That was happening on Friday morning. So a lot of people were scrambling around trying to figure out what the market was going to do, but they missed a really big perspective. And in this video, I'm going to share that with you. It might not have been something that you even considered. Before I do that, please help other traders. Share my video. They're trying to learn just like you are. You know my content is good. I won't steer you wrong. I'm going to give you lots of valuable insights. Trying to reach as many traders as I possibly can. So when you like my videos and you comment, it helps the algorithms. And by the way, let me know how you did last week. That was a really challenging trading week. Please subscribe to my YouTube channel and turn on your notifications. And this week it's especially important because I'm going to be releasing a video. I'm going to be talking about the bullets that I had to dodge last Thursday. When I came into the day, everything was perfect. My positions were doing great. Just awesome setup. That changed in an instant. And within an hour, I was scrambling to adjust close positions and try to get myself neutral and even short. So make sure that you watch that video because this is just a matter of time until it happens to you. Perhaps you went through it as well Thursday. Seeing how I handled it is going to help you. And I'm thinking I'll have that video out Tuesday. When we came in Friday morning, we had this really nasty drop on Thursday, a 250-point gap reversal on Thursday. There was blood on the streets. So when we came in Friday morning, most people were pecking around thinking, oh my gosh, where am I going to find opportunity? Is the market going to go down? Are we going to break the 100-day moving average? We rested right on it. Oh yes, the market looks like it's going down. Should I favor the short side here? Should I favor the long side? What you needed to consider was just take a big step backwards. And I had already done this before the open. And I took a look at the chart, and I know this from previous experience, but here's how you should look at it. So when you're reviewing the market, you look at this long, gigantic red candle. Instantly, you should be going, hey, have I seen any of those before? Well, yeah, actually, there was one here back a month ago. Oh, well, what happened after that long red candle? Well, the market kind of floated right back up into the middle of this long range here, and it gradually found its way back to a new high. Are we going to see that this time? No. I don't think so because we're starting to see some pretty heavy selling pressure. Well, then what's the takeaway here? Well, the takeaway is, do you see any other long red candles like this? No, I don't. Okay. Well, do you see two really long, massive, gigantic red candles like this and like this back to back, or even within the same week? No, I don't see that. Good. That's excellent information. Sometimes our odds are related to what we know won't happen. So we don't have to look at, gee, I know exactly where the market is going to go today. I know the directional bias today. Knowing what is not likely to happen will set up some high odds opportunities. And in this particular case, I looked at this and said, okay, what are the odds that this next week, this upcoming week, that we're going to get another long red candle like that? What news is going to come out that's going to spark that type of panic? Well, first of all, this wasn't panic-related selling. This is primarily program-generated selling. We'll talk about it a little bit later. There were some nervous jitters because the Fed probably won't cut rates again this year, but this was all program-generated. So when we look at that chart, I'll tell you how I know that. So there wasn't any real dire news. In fact, NVIDIA posted excellent earnings. So what's going to come out next week that's going to spook the market? There really isn't a lot of news. There's nothing to generate another long red candle like that. And the only thing that ever really would do that would be some kind of massive credit crisis. I mean, big failures, panic. Oh, we need to liquidate everything. I haven't seen that in 15 years. So no, that's not going to happen. In fact, we've got a holiday next week. Wednesday, people are going to be traveling. That means that trading desks are going to be very lightly staffed. Not going to be a lot of people around. The volume's going to dry up. Thursday is the holiday. Friday is a shortened, abbreviated trading session. So we've only got a half day on Friday. So what in the heck is going to cause that long red candle between now and next Friday? Nothing. Okay, well, you know what happened to option implied volatilities when we got this long red candle Thursday? They spiked. Good. I'm going to take advantage of a really quiet week next week. I'm going to sell premium way out of the money. I'm going to generate a 25% return on these spreads when they expire worthless. I am in premium selling mode because it's going to be a quiet, dull week without a lot of news. The market doesn't have to rally. It could sit right on that 100-day moving average for all I care. It could even drift down below the 100-day moving average. That's okay too. It can go higher. All of these scenarios are going to play into my hand. The only thing that can't happen is that I would get another long red candle like this. My odds are very, very high on this trade. Make sure that when you're looking for your odds, you're zooming out, you're getting the context. What just happened? Is this likely to continue? What proof do I have of it? Is there any historical evidence of this happening? And what are the news events that are coming up next week that might possibly cause a long red candle like that? If there aren't any, great. I already know what my trading game plan is going into Friday. I'm going to be selling out of the money premium on stocks that have held up relatively well. That's my plan. I didn't have to peck around. I didn't have to hunt around for my opportunities. Let's take a look at what last week's trade did. Letter B as in boy, and there's the price action. You can see it didn't do much of anything. Here's what the market did. It sold off like mad. This stock held its own very, very nicely. Now, in that video, I did mention to you that we had our second bounce off of the 50-day moving average right here. So this was Friday's action a week ago. And I had mentioned to you in that Sunday video, Monday, I want to see follow through. Immediately, I want to see Monday be an update. I want to see Tuesday be an update because that will tell me that twice now that 50-day moving average has been tested and now buyers are interested. If I don't see that, I don't want to trade from the long side. Okay, we've already seen at that point a lower high double top. We already were looking for the market to continue to drift higher. It didn't. Last week, we already had warning signs that the market was weaker than we expected. If we didn't see that immediate follow through on Monday, then we knew not to take long positions. So I didn't do much of anything last week. I was nursing and managing my previous positions. I had bullish put spreads on. I had naked put rights on for stocks. Didn't have a ton of positions, but I had enough of them where I didn't need to add to my risk exposure, especially with the market backdrop. Letter B, you really shouldn't have taken the trade. But if you did, no worries. Held up beautifully. Place an order to sell it where you bought it. Scratch the trade. We have new information, and that new information is that sellers are fairly aggressive. So why the heck do we want to go out there adding a lot of long positions? It's not a bad stock. It could move higher. I am going to be featuring a long stock this week, but I'm kind of looking for it to tread water, and I'm trying to take advantage of some premium decay. So I'm not expecting the stock to fall. I'm going to show you that trade in just a little bit, so make sure that you stick around for that. So what was the big news last week? What hit the market? Was there anything to cause this massive decline? Well, first of all, the selling wasn't that heavy, but it was a little persistent. It showed us that we had some weakness. We weren't off to the races. Buyers were not aggressive. But when we came in Thursday, we had news that NVIDIA posted fantastic earnings. And they said that they don't see an AI bubble. Well, they're on the best side of that business because everybody's buying the heck out of the chips. And so the market gapped up. It gapped up through a VWAP Q. It gapped up through the 50-day moving average. It looked like we were off to the races. Perhaps we were finally going to get a decent little bounce in here. Not so fast. That reversed very, very quickly. And it reversed because on Wednesday, we got the FOMC minutes. And in those minutes, we learned that half of the officials really didn't even favor the last rate cut, and they do not see any need for a rate cut in December. The next FOMC meeting is going to be on December 10th. So the odds of another rate cut are pretty slim right now. Well, the market did not like that. It didn't like it particularly on Wednesday, but everybody was waiting to see how the news would come out for NVIDIA. Lo and behold, they post a great number. Let's go into the 5-minute chart and we'll take a look at the price action on Thursday. There's your big gap up, and they tried to rally the market up. When they weren't able to do that, we started to see some long red candles off of the high. I actually tried a long position in here. I felt that that shakeout was going to attract some short covering because they would feel that the market was going to roll over, and we marched right back up to the high. I bought futures in here. I took a quick 10-point loss on that first long red candle using the open of that green candle as my stop, and now it's time to watch. I was not going to wait any longer on this. As soon as we broke below VWAP and we took out the low of the day, I was short right in there. We blew through the 50-day moving average. We blew through a VWAP Q. We didn't poke at it. We absolutely fell through it, and then the volume just absolutely screamed. This gap reversal, so when you have a big gap up, you got a lot of downside room. When you're in buying a gap up like this, you're on pins and needles because this could reverse very quickly. I hate trading gap and goes. I love trading gap reversals. As soon as that support breaks, all the programs start kicking in and they feed on each other, and then the rout is on. So by the close of the day, 250 points off of that high closed on the 100-day moving average. Here's what happened Friday morning is we got this little choppy move lower, and we were able to find support at Friday's low. Market was able to find a little bit of support, but it's pretty typical for the market to move back into the prior day's range once you have one of those long red candles. You don't typically get two long red candles in a row or two green candles for that. Usually move into that range, and it's a day of rest while everyone's kind of digesting what went on. The other news that we had some retailers that reported last week. It was kind of a mixed bag of results. We had consumer sentiment came out. It was better than feared, but it's still at very low levels right now. It has been since the shutdown. Consumer confidence not good. We got the flash PMIs. Services and manufacturing were in expansion territory, just above 50. So those are actually pretty good. Let's take a look and see what the price action was going into last week. I kind of talked about how the table was set where we were looking for that follow through, and we didn't get it, and the market actually continued to drift lower. These are warning signs that the selling pressure was pretty heavy. What I'd like to do is to take you into my chat room. It's one thing for me to sit and explain, here's what you should have done, and act like some kind of genius. It's another to actually be posting comments consistent with what I'm teaching you that are time-stamped. This is actually what was happening in my chat room. So here are my pre-open market comments on Friday. I post these every day before the open. As we scroll up, you're going to see a number of trades that I'm going to highlight. There are a couple of charts. So I'm going to take a look at this one first because this was a downward sloping trading channel. I posted this right as these candles were forming. So we've got a downward sloping trading channel here. What we'll be looking for is a break through the lower end and a bullish engulfing candle. We got it, and I posted, I think this was our little selling climax. I think support has been confirmed. The odds of us moving higher are good from this point forward. Another chart that I posted, this is my 1OP indicator. This thing is so dang good. Man, it is so accurate. So I just took a screenshot, and what I do is when there's a sell signal, I color it pink. When there's a buy signal, I color it green, and you can see how well it's performed. And look at where those signals come into play. They're not halfway through the move. They're right at the inflection point. So really cool stuff. So let's take a look at what we did in the chat room. This starts at 9:07. I'm looking for a nice long green candle into the gap. So I'd like to see it go to a new high a day. That's kind of what I'm watching for early in the day. So this is 9:31. This is an hour into trading. What do? I bought, and this is the way that we identify trades in the chat room, is I'm short. I bought puts, so I'm short VXX. And I bought these puts for 95 cents. Just like I had mentioned to you earlier, my play was volatility is going to come down. We are not going to get two long red candles in a row. We are not going to see a lot of volatility heading into Thanksgiving. I feel that implied volatilities are going to come in today. I feel that the market is going to bounce into the range of that long red candle, and those juiced option implied volatilities are going to come right down. I'm also mentioning that this move was stubborn. This is early in the day. This is a sign that buyers are engaged, and the risk of playing the short side is very, very high right now. After a big down day like this, we have a very high likelihood of having the market rally and having shorts fly back right into our face. Warning, members, not to short. And then here you can see AVGO. This is one of the put spreads that I had mentioned to you. November 28th, I sold the 317.50, 315 bullish put spread, 50 cents credit. I will make 25% on that if the stock stays above 317.50 next week. Holiday shortened week. Beautiful trade. If you feel another round of selling, like we saw yesterday, is unlikely in the next week, there's some great put credit spreads you should be considering. The stock can move lower. It just can't tank. It can stay flat. It can move higher. All things that I've just mentioned. If you wait, you will miss this opportunity. The time is now. It'll vaporize as soon as the market rallies. You're going to have a hard time getting these spreads off. The option implied volatilities are going to contract, and they'll drain the premium out of it instantly. Those are my first comments. Less than 2 hours in. Sold the Tesla November 28, 360, 350, 750 put credit spread. Got 40 cents for that. That's going to yield probably about a 20% return in a week. Long ES. Bought the S&P 500, 65.82, 2 hours into trading. Didn't want to miss the move. I was trying to buy a little bit of a pullback. I just decided I needed to buy them. So the question to ask is why the market sold off so hard yesterday. It was the FOMC minutes. Would the market tank again like that? No. Option implied volatilities are sky high. They're going to get trashed next week. So these are all comments that I've made to you. And there you can see at 11 o'clock, 2.5 hours into trading, I took a 52-point gain on my futures. And there you can see at 1 o'clock in the afternoon, I got out of my VIX Lotto puts. Those are the $40 puts. Sold them for $3.05. Took a 200% gain. Yay, Pete, you're a hero. You're a genius. That's not the point. I did well. I had some nice trades. The point is that everything that I'm trying to teach you in today's video is consistent with what I'm doing in the chat room, real time, all time stamped. I put my trades in, I post it immediately, seconds later, so there's no delay. That's how you learn. By all means, please take the free trial. 2-week free trial. I don't even ask you for a credit card. It's so easy. Take the free trial. Make sure that what I'm telling you is true. Watch us trade in the chat room. We've got so many good traders. I also have a course that took me 3 years to write. It'll probably take you 2 weeks to read through the course. It's not public. It's really, really good information. You can also trade using my trading software. You can check out the 1OP indicator that I showed you earlier. It's really incredible. So make sure you come in and take the free trial, kick it around, watch me trade real time. I look forward to having you in the chat room. Let's take a look at what we've got coming up next week in terms of any kind of major news. We don't have a lot because the government shut down. Tentative releases. I believe we're going to get durable goods orders. We will get the beige book. We've got retail sales coming out. Retail sales shouldn't matter much because retailers are posting earnings. That's much more important. They're telling us what the last quarter looked like and what the guidance is for next quarter. So I don't think retail sales is going to be a huge market driver next week. And then we've got Black Friday coming in. So there's really not much news-wise to drive the market. I'm not looking for a lot of action. What do I think is going to happen with the market? I think that we're going to see the support of the 100-day moving average hold. I believe that we're going to try and recapture a little bit more of this red candle in here. I think that the market's probably going to rest somewhere in the middle of it, somewhere around the 665 level. And then we'll see what happens when we come back from Thanksgiving. This is all day to day right now. So it is unusual to see this level of selling into year end. Year end is typically very bullish. Not this year. This year, we're starting to see some nervous jitters. The Fed's repo window has been used with greater frequency. That could be signaling some liquidity issues. Earnings, yeah, they've been pretty good. They haven't been bad. Economic data points, we don't have any. We don't know what the heck is going on. They posted the September jobs number last week, 116,000. That was 3 months ago, okay? And it was better than feared. At the time, we'd seen deteriorating jobs numbers. I don't trust those numbers at all. We haven't been able to trust the jobs report all year so far. So who knows where it is? And I'm hearing that we may never get a jobs report for October. And I'm also hearing that the Fed is not likely to have a jobs report before the FOMC statement. So they're kind of flying blind as well, which surprises me that they would stay so hawkish during this uncertainty. They don't know what the economic data points are either. Well, for crying out loud, cut by a quarter point and then see where everything settles, and then you don't have to do it again for a while. That's just my personal opinion. Plus, you know that the Fed repo facility is being tapped. There's some liquidity issues. We've had a couple of subprime failures. Err on the side of caution. So I don't get it, but it's all good. All I'm going to do is I'm going to trade price action. What am I looking to do next week? Well, you kind of already know where I'm leaning. I want to sell some dang premium. I don't know that we're going to get a lot of premium when we come in Monday because it's already going to be crushed. It got crushed Friday morning. That was your moment. Now you get a weekend. If the market opens flat, if the market opens above the 100-day moving average, they're going to go... They're going to suck all the dang premium out of these options because nothing's going to be happening for a week. So we're going to take advantage of that. And what I'm going to be looking for is a stock that held up really well. And I'm going to do a diagonal spread. I'm going to buy deep in the money options. If the stock moves higher, which I'm looking for a good strong stock, that's cool. But I'm going to be selling some out of the money November 28th premium against it. And so I'm going to go into a search. This is Pop plus Bull. This tells me that the previous day, the stock had a really big breakout. I look through the list and I've got Google. Google is one that I like. Let's zoom in, make it a little easier for you to see what's going on here. And you can see Google opened a lot higher on Thursday. And in fact, look at how well it's been holding up. Here's what the market's been doing. You can see green line above zero, relative strength. Warren Buffett just said that he's been buying some Google. He's got a lot of cash and he hasn't been buying any tech stocks. So he obviously likes Google. Well, that's good company to have. So Google recently had some chip announcements for their Gemini chip. So lots of good news surrounding the stock. And we know there's some long-term buyers in it. Beautiful. Look at how well it held up during that bloodbath on Thursday. AVWAP-E held up beautifully. Look at what the stock did Friday when the market recovered a little bit of its losses. Not a lot, a little bit. What did Google do? Boom, right up to the halfway point and above. This stock wants to go higher. I want to own strong stocks. So what I'm going to be doing is I'm going to go deep in the money and I'm going to be buying a January call with the $270 strike price. Okay, stock closed around $300. These options are $30 in the money. Going to have a very high delta, and we're going deep so that we're not paying a lot of option implied volatility. That's the whole point to doing this. It's almost like owning stock and selling calls against it. You could do that. This is a little bit better way to leverage that. So we're going to be buying the 270 calls, and then we're going to be selling the November 28th. There's your expiration. So these expire Black Friday. We're going to be selling the 310 calls. And we're going to try and do this. You can see that the market on that is 34.55 by 35.55. We're going to try and do this for $35. Let's make the math as simple as possible. We're going to put this spread on for $35. So what happens if Google rallies up to $310? Well, our 270 calls are going to go up beautifully. That spread is going to be worth at least $40 if that happens, okay? And if the stock goes up to 320, 350, 400, we don't care. That spread's going to be worth $40. We paid $35 for it. We'll make $5 on that. That's a beautiful return in one dang week. Well, what happens if Google doesn't do anything? What happens if Google just sits there? That's okay too, okay? Because we're going to have very little time premium decay on those 270 calls that we bought, and these are going to expire worthless. So we could conceivably make almost $2 on that trade on a $35 investment. Great. That's going to be somewhere in the neighborhood of probably a 7.5% return in 1 week. I love it. It's a really nice trade. Make sure that when you're looking for odds, you're looking for probabilities, you zoom out, get a feel for the big picture when you're trying to assess where your odds are, where your opportunities lie. Sometimes it's blatantly obvious, like it was on Friday. Yes, there are some days when the market's kind of here or there, it's flirting around. You're just looking to nickel and dime. You're trying to trade. You're trying to make some money at that particular time. There are moments when, you're kind of in that mode, but always make sure that you're taking a step back to look at the longer term perspective. So that's what I'm looking for next week. Please subscribe to my YouTube channel and turn on those notifications, because I'm going to have a really cool video that's going to be coming out Tuesday, and it's going to be on the bullets that I had to dodge instantly Thursday morning. And I had some risk exposure and I had to adjust very quickly. So I'm going to do that. And if you haven't been faced with that situation, you're going to be. It's just a matter of time. And I sense that probably most of you went through that on Thursday. It was kind of a crazy moment. So take the free trial. Most importantly, everyone, be safe. Have a great Thanksgiving. We'll look for you soon. See how we trade live every day and take our 14-day free trial. I won't even ask you for a credit card. Dive into the action and trade alongside of us. Your downside is that you get some great trade ideas. Your upside is unlimited because you'll learn the skills that you need to be profitable. Check out OneOption.com and see for yourself.